Hey everybody, Boris Schlossberg, and the biggest story in the FX market today is dollar-yen. We've seen an explosion in US yields, which has really helped to boost the dollar after relentless selling for the past several weeks. As a matter of fact, the dollar has been really well bid all week long this week because the after effect of the shocks from the hurricanes and the threat from North Korea has really evaporated, and the market is feeling a lot better about the prospects for the US economy. In addition to which, the movement of President Trump much more to the center, his negotiation with Democrats, and his discussion with Democrats about a potential tax cut deal is viewed very, very positively by both the equity, the bond, and the currency markets. And all of that has created a very strong bid underneath the dollar. As a matter of fact, dollar-yen on a spot basis has moved more than 200 points this whole week in an explosion of volatility to the upside. However, the really big question remains is inflation. Tomorrow, we're going to get the CPI data, and the market is going to be all eyes focused on that number. If inflation data begins to show an upward tick, that's going to put the idea that the Fed rate hike in December is still on the table. And that indeed could provide a much more durable and longer rally for the dollar. Now, the inflation data numbers tomorrow are not going to include any kind of hurricane data that we saw from Harvey. However, it's pretty much common knowledge that hurricane causes an increase in inflation because of the need to rebuild and desire for new services and goods. So the potential here is that the dollar rally could really continue as inflation pressures in the US economy begin to percolate to the upside and the Fed becomes very serious about a potential rate hike in December. That's the biggest story in the currency market today, and I'll be watching dollar-yen for the next several days as well. This is Boris Schlossberg from Chicago Mercantile Exchange.